Good afternoon. This is Josh here at Chaikin Analytics, and I'd like to welcome you to our presentation of the Experts Trading Checklist for Supercharged Options Trades. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics, and Larry McMillan, founder of Option Strategist. Chaikin Analytics is not registered as a broker-dealer or investment advisor, either with the U.S. Securities Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. As a reminder, this webinar is being recorded and a copy will be sent to all registrants. Please submit your questions via the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Get us started. Here is Larry McMillan.
Hi, thanks. I just want to introduce Marc Chaikin. I suppose most of you know that Marc's been around for a while. We used to actually work at the same firm a number of years ago. But he founded Chaikin Analytics, which has had a very successful run and involves a number of good trading systems, which I'm sure he's going to show you some today. This market has a setup of some very interesting things. Both, we were overbought and then oversold, and now we've rallied, and who knows where we are. But hopefully, Marc will be able to explain all that to you. So, Marc, let me turn it over to you, and let's hear what you have to say.
Josh, do you have me unmuted?
Marc, you're good to go.
Okay, Larry, thank you very much, and welcome everybody. We're going to talk about three things tonight. Think of it as 1, 2, 3. What's the market likely to do going forward? So which side of the market do you want to be on? Number 2, what stocks do you want to be in to play that market move? And number 3, how do you find the best options trades? And we're going to get into some really simple but powerful options trades that involve vertical put and call spreads. And I know Larry's a big fan of these when used appropriately. So my background, as Larry said, long time on Wall Street. He and I have been in the options business for 40 years. I've been using technical analysis for 45 years, but always in conjunction with fundamentals. Fundamentals drive the market. That's why we rallied today, because nothing changed last week. Earnings season is here, and earnings have been great. The banks are telling us the economy is strong. So you need to know the fundamentals, but you always need technicals to define exits and entries and trends and resistance and support levels. For 5 years, I headed up the options department at a firm called Tucker Anthony and R.L. Day. Great regional firm, now part of Day & Rauscher. 250 brokers, tens of thousands of options clients. Most of them lost money. And part of tonight's webinar is about why they lost money and what we're doing to rectify that. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were colleagues, some of them were clients. And the reason that's important is when I came out of retirement in 2010 with my wife Sandy to form Chaikin Analytics, I drew on everything I had learned from these successful institutional investors and created the Chaikin Power Gauge rating. It's the culmination of my life's work, and it goes way beyond technical analysis. Basically synthesizes all the fundamentals so that you can use fundamental analysis without doing the heavy lifting. So we're going to look at 5 keys to successful options trading, how to find bulls and bears with the Chaikin Power Gauge for fundamentals, and our unique way of looking at relative price strength for the technicals. Going to show you a way to use Chaikin Money Flow, which many of you are familiar with. In fact, please give us a little love if you use Chaikin Money Flow. Type a big C into the Q&A box, because it's on all of your online brokerage platforms. If you use stockcharts.com, Reuters, Bloomberg, it's there. It's been there since 1982. But we're going to show you something different tonight, something unique that enables you to pinpoint tops in a way that nobody has documented. Going to show you rules-based exits and entries. Obviously, for options traders, they're very critical. How to find probability-based options trades, and then what to do to participate in this very strong fourth quarter rally. Now, I'm in Italy, by the way, with my wife, Sandy, and she paid for this vacation based on her trading. Started investing in trading just 5 years ago, and she's killing it. And we're going to show you how you can do it as well. You may hear church bells in the background because we're in a small hill town in Umbria called Spello near Assisi, and the church bells ring loud and clear. But we're going to have a fourth quarter rally. Now, the interesting thing is there's this 6-hour time difference. So I put together this webinar deck about 4 hours ago and didn't know that the market was going to finish so strong, but still was anticipating a strong fourth quarter rally. Going to show you right at the end of the webinar what we believe are the strongest stocks to participate in this fourth quarter rally. So let's start with a question. Do you see risks ahead for stocks? If you do, type a big R into the question box, and Josh, take the temperature of the crowd for me after about 10 seconds and tell me what people are thinking.
Mostly R's rolling in, overwhelmingly.
Okay, so therefore we're going to start with a little bit of market analysis because I think it's really important if you're an options trader or a swing trader in stocks to have a sense of what the market's doing and what it's likely to do going forward. So we've used this slide before, mainly in February and March of this year, and it's now relevant again. In 2017, we were in an uptrend on autopilot. You didn't even have a correction of 3%. And then we went into that roller coaster of a correction in 2018, February and March. Once that correction was over, we're going to look at that pattern. It's a W-shaped bottom. We basically went into another uptrend on autopilot. That ended in September, and then we had a roller coaster, not of a correction, but of a pullback. So it's really important to distinguish between the two. Here's a one-year chart of the SPY, and you see something labeled a W bottom. Anytime you have a decline in the S&P 500 on a closing basis of more than 2%, 10%, the resulting bottom always takes the shape of the letter W. And we had that, and then we went into a very, very lovely uptrend, a series of higher highs and higher lows. And Chaikin Money Flow, which is this big mountain of green from April through September, never went red. It normally fluctuates around a zero line, so from red to green and back again. The reason is institutions were buying the rally. Now, we ran into resistance at 2,800 and finally broke through in July and then powered up to new all-time highs at 2,940 on the S&P 500. Now, recently, we had a two-day panic sell-off. If you were watching CNBC or reading the headlines, you were led to believe it's going to be another repeat of February and March. It's not going to happen, folks. Not in my opinion. Can't be sure, but here's why I don't believe it's going to happen. We're in the midterm election year. It's the strongest buy point of the whole four-year presidential cycle. And typically in the fourth quarter of a midterm election year, you rally flush into year end and then into the first quarter of the following year. We've been saying 2,900, 3,000 is our year end target. I now believe we can be 3,050 to 3,100 by year end. Now, what would make me change my mind? If we close below 2,650 in today's rally up to 2,800, tells me that's much less likely than it was on Thursday and Friday of last week. If we close below 2,650, that means we've corrected more than 10%. I don't think that's going to happen. And the next chart on the 5-year of the SPY shows you what the difference is. In 14 and 15, we had what are known as V-shaped bottoms. They come when you sell off, pull back 5 to 10%. After 10%, you need a W bottom. So we had that in 15, in August, September. We had that in 16, in January, February, and then again in 18. Notice that after that last V-shaped bottom at the presidential election in November of 16, 17 was a piece of cake unless you let the headlines affect you. So it is important to have a market. So when I did this chart this morning, I said, are we in a V-shaped bottom pattern? And I believe the answer is yes. Now, on the bottom of that one-year chart, for those of you who follow Chaikin, we've introduced the long-anticipated Chaikin power gauge rating for ETFs. We have power gauge ratings for the 400 most actively traded equity ETFs, and we're going to keep rolling in technical ratings for the others. This blends fundamentals and technicals. We're doing special webinars just on that. But the bottom line is we're in a pullback, and this chart puts pullbacks into perspective. We've had a 6.5% decline from 2940 down to 2700. There have been many, many, many of them in this bull market, and preceding that, 80 of them since 1945. They average 6%. That's what we just did. They typically last a month. The good news is they recovered to new highs within a month. Once you get beyond 10%, now you're in a correction and you need the W bottom. Don't think that's going to happen this time. It's always possible. That's why our fail-safe level for investors is 2650. If you're a trader, you got to be finding opportunities where you can in the best stocks, and that's what this webinar is all about. Now, here's what it looked like last week. Big spike in new lows at the bottom. This chart is courtesy of stockcharts.com. Notice that it's very similar in magnitude to what we had back here in February. The difference is that decline was 13%. This decline's only 6.5%. A very, very good market technician, Tony Dwyer, has said, everybody says a pullback is healthy until you're living through it. That's pretty ironic because we all think pullbacks are buying opportunities and they're a fact of life, but when you're in the middle of it, it's pretty scary. That's why I've spent so much time at the beginning of this webinar going through what our view on the market is. So there's a long uptrend in place since February of 16. You can see the trend line. We pretty much stopped right there at 2,700 last week. I now believe the market is likely to rally into year end. Obviously, there'll be some pullbacks along the way, but a 2+% move in the S&P today, almost 3% in the NASDAQ, and the big stocks that we're going to talk about on this webinar really participated today. Got to look for buying opportunities now. Our scenario for 2018 has been consistent. Higher interest rates, rising earnings, very bullish scenario. When you read that interest rates were the reason we dropped last week, nothing could be further from the truth. That's just an explanation in search of a question. The market basically was ripe for a sell-off. Selling triggered selling, a little bit of margin calls. But the bottom line is when interest rates go up because the economy is strong and earnings are rising, that's bullish, not bearish. What spooked the market last week was the very sharp increase in 10-year Treasury yields, and then Jerome Powell, the Fed chair, saying, well, we're going to raise rates no matter what. And then President Trump basically slapped him down and did so again right before the close today. Fed is independent, but very sensitive to the whims of the market, not likely to do something stupid like they did in 2006 and 2007, where they raised rates into a soft economy. This economy is strong, it's not soft, but moderate interest rate increases are bullish. So that's our scenario. Now, if you don't agree with any of that, here's how you profit from a pullback. This was done this morning when the S&P was only up 0.75%. Bearish vertical put spread, and buy yourself some time. If you believe the market is going to break 2650 and go down to 2600 or beyond, for $386, you can participate in a 6.5% move on the downside. That would now be about 5.5%. When I pulled this chart from our options play ideas module, the profit potential on that position, buying the 277 put that expires on November 30th, selling the 260 put against it to reduce the cost from 597 here in the middle to 386. That's a big reduction. Wouldn't you like to buy everything in life at a 33% discount? 340% profit potential. You got to buy yourself some time if you're bearish. Through November 30th, takes you past Thanksgiving. We don't believe in that, but let's say you had a 401k plan with $300,000 in it. You buy 10 of these put spreads, $3,900 worth of insurance, and you can play the market for a 10% rally into year end or an 8% rally. Vertical put spreads are a great way to play the market. The odds are in your favor. If you bought that put outright, by the way, and the market dropped all the way to 2,600, you'd made 185% return. You do the spread, it's a 340% return. It's almost double the return, less money at risk, higher probability trade. But we're bullish, so let's find a way to point you in the right direction. Biggest problem, as traders, too much information. We're inundated with the 24-hour news cycle on CNBC, in the financial press, websites, chat rooms, you get it. So you've got to have a way to cut through the information. Our answer for information overload is Chaikin Analytics for both iPad and desktop, and we've integrated options play, which are probability-based strategies. Now, if you're part of Larry McMillan's community, you're getting some great trades from the various systems that Larry has developed and shares with his community. But there are 3,000 stocks with options traded, probably 500 to 1,000 with active options trades, add in the ETFs. You need a way to find the right strategy if you have a particular instrument that you want to trade, whether it's an ETF or a stock. Options Play that we license does that for you. So because we have this unique approach that combines fundamentals and technicals, we've really attracted a lot of very smart and successful traders. Obviously, Larry McMillan, option strategist front and center, but John Najarian, much more aggressive, flow-based. Larry takes a more quantitative-based approach to options trading. Jim Cramer, probably never touched an option in his life, but he's a great stock picker. All have embraced Chaikin Analytics, written up in Barron's and Forbes, and used by some of our old institutional clients at Fidelity and Soros and Paulson hedge funds. So it's a unique way to look at stocks and now ETFs. And remember, I started out by saying that 95% of the traders at Tucker Anthony lost money. The reason they lost money is they didn't understand the importance of having a directional edge. The better you are at deciding where a stock is headed, obviously, the better your options trades will be. It sounds like a truism, but they didn't understand that. They bought short-dated options out of the money, sort of making bets like you would in a Las Vegas casino, when you can actually use something like the Chaikin Power Gauge rating to put options profits on the table for yourself. So we combine fundamentals with technicals into a quantitative model, give you Chaikin buy and sell signals, 6 pairs of them. Larry has some of his own entry techniques. Always use a discipline because it's better than trading on your emotions. So the Chaikin Power Gauge rating is a simple display, goes from very bearish to very bullish, looks sort of like the gas gauge on your car, but please don't confuse a simple display with a simplistic approach. This is very powerful number crunching, taking all the key fundamental metrics and combining them. And now we have a rating for all active equity ETFs as well. I like to say that the Power Gauge rating is like a Chevrolet with a Ferrari engine under the hood. And the reason is that it takes all that data on the right, and analyzes it, synthesizes it into 4 primary factors, 20 sub-factors. So I use Progressive Insurance as an example. We use this in a webinar that my wife Sandy did last Thursday here from Italy. Progressive was 68. It went down to around 66 on Friday. And then we're going to show you what it did earlier today. It reported earnings, and we would have expected good earnings, and they delivered. So this is what Progressive looked like heading into this morning's trading. Power gauge rating is at the bottom. Institutions have been buying it. History of positive earnings surprises. We color code our earnings dates, red, yellow, or green. And then sure enough, positive earnings surprise, and the stock was up 5% earlier today. I think it actually finished higher than that. We're going to help you find stocks like this on tonight's webinar, up 6% on the day. This is an insurance company. You've seen Flow on TV. They're just killing it. And this stock is likely to make new highs into year end, which means it's probably going to go to that upper volatility band. Now, Jim Cramer has said that Chaikin Analytics model is the best. Used it at my old hedge fund. This slide is from a live event that I did that Jim sponsored a year ago. They had another one last week in New York. 10 of the best speakers on Wall Street. I was very honored to be part of that. And the same slide that I'm going to show you on the next webinar slide is what we talked about at that event. Now, Jim and I are doing an event the day after Election Day. Live, 1-hour private webinar. So if you like what you hear tonight, please sign up for that when the page is up and running. It'll be a couple of weeks before we get it up. But very nice of Jim to recognize the power gauge and Chaikin Money Flow. So what got Jim so excited again, and Larry and John Najarian? It's the fact that we synthesize the important fundamental factors that successful institutional investors look at every day into a model that does the heavy lifting on 5,000 US equities, now 400 active equity ETFs. By the end of the year, 1,900 ETFs with a technical rating. For the equity ETFs, we're combining fundamentals with technicals. Now, successful institutional investors have their own way of looking at the world. Some of them are value investors, like a Warren Buffett, looks at free cash flow. Some of them are growth oriented, like Jim Cramer, like T. Rowe Price. Some of the Fidelity funds, they look at different factors. Technicals in the model are only 15%. This is a pure fundamental model, and sentiment is very important. Industry group relative strength. If Progressive reported better than expected earnings, then some of the other insurance companies are likely to do the same. Now, I've boxed earnings surprise because we're in earnings season. It started on Friday when the major banks reported. It continued yesterday into today. I'm going to look at Netflix, which reported fabulous earnings after the close, and included that in our webinar deck so we could talk about what you could and should have done with Netflix heading into earnings. But the key here is that earnings surprise is one of the factors in the model because earnings surprises come in bunches, just like we saw with Progressive. Now a 4th quarter in a row of positive earnings surprises, actually 9 quarters in a row. And the reason that's important, which I learned when I was at Drexel Burnham in the mid-'80s, mentored by a guy named George Douglas, who's still running Quant Money today, is that when a company reports a positive earnings surprise, Wall Street analysts raise their estimates. Negative earnings surprise, they tend to lower their estimates. That happened to IBM after the close. Their revenue missed expectations. And the reason that matters is that analyst estimate revisions are the biggest single short-term driver of stock price movements. So in spite of what you read, that high-frequency trading is changing the rules, Wall Street is pretty much the same as it was when I started out 50 years ago. Analysts at big major banks like Goldman Sachs, Morgan Stanley, I think Larry used to be at Kidder Peabody, which was a fine research firm back in the day, have a big influence over institutional investors. They call their best clients when they change their thinking or raise their estimates or lower them. That drives prices, and that's why there are two of the factors in the model in addition to analyst ratings. So this is what's known as a multi-factor model, and the reason it's important is because it gives you a directional edge. Now, here's the performance of the model going back to 1999. The model was frozen in September of 10, so everything before them is back-tested. Everything after that is real-time. Same shape of the curve. The average very bullish stock in the Russell 3000 up 20% a year. The average very bearish stock up only 1%, and that's after a 9-year bull market. So as options traders, your job is to shoot the bears. Get rid of bearish stocks from your long trading screens. Use them for put buying or put spread candidates, and focus your long trades on the very bullish stocks. Now, in 2015, that was really important. Why? Because the very bearish stocks in the Russell, in the middle of a bull market, were down almost 18%. Energy stocks went into their own bear market, and the power gauge rating picked that up starting in January of 14, with the offshore drillers, accelerated in August, September of 14 into 15 when Kinder Morgan in March of 15 turned bearish, a stock that a lot of advisors, a lot of yield conscious people were buying. Power gauge rating turned bearish at 42 on the way down to 12. So it was very important in 2015 to know which stocks had very bearish ratings. Small caps, energies, they really hurt you if you stayed long those stocks. Summing it all up, successful trading demands a disciplined methodology. So this pyramid says it all. Top of the pyramid, Chaikin power gauge rating. Fundamentals matter. Bottom of the pyramid, just two technical indicators, Chaikin Money Flow and Chaikin relative strength. And then that sweet spot, some disciplined buy and sell methodology. We have 6 pairs of buy and sell signals. You can go to our website, chaikinanalytics.com, and see a description of each of these signals. We try and be as transparent as possible. Obviously, there are a few proprietary calculations, but they make sense, and we're going to show you them in a minute. So there's a pattern that we call classic Chaikin bulls. Power gauge is bullish. We like to read the chart from the bottom up. Most people look at the price chart, then they look at the technicals. Why do we look at the chart from the bottom up? Because the Chaikin power gauge gives you your directional edge, and it's a red, green, yellow ribbon on the bottom. So here's Centene, a Medicare provider. They figured out how to make money in a very difficult environment where the government's cutting back subsidies, and it's been outperforming the market. That's our proprietary relative strength indicator. It's a heat map that goes from red to green, and it's our way of solving the information overload problem, because you could go to Investors Business Daily, William O'Neill. They have relative strength as a number from 1 to 99. If your head is full with numbers, you're not going to trade well. Then we look at Chaikin Money Flow to see what the institutions are doing, and they were buying Centene. They were buying it back in the fourth quarter of 17. They've been buying it here in 18. And then we color code the earnings, and notice companies due to report on October 23rd. You see that at the top of the screen. They've had 4 quarters in a row of positive earnings surprises. Now, we have an earnings alert indicator. If analysts were raising their estimates, it would be a big green exclamation point. They're not. So far, with a week to go, analysts are sort of a little laid back here about Centene, but this was a classic Chaikin bull. These are the kinds of stocks you want to trade from the long side. On the screen are 4 green triangles. This is one of our 6 buy signals. We call this a relative strength buy. It's really powerful. It's great for swing trading and options trading. The reason is these signals are 70% accurate, and they last for 4 to 8 weeks. So you can buy time. You can take a low delta trade or a high delta trade. Now, how many of you are familiar with the phrase delta? If you are, type a big D in the question box, please. Well, the good news is if you're not, you can just click on that options button and get a high probability trade. The wonderful thing about these relative strength buy signals is if you have confidence that a stock is likely to have a move of 4 to 8 weeks, you can zero in on an option strategy to make an awful lot of money on the upside or the downside. You can buy out of the money options with a low delta. You can buy in the money spreads with a high delta. You can really customize the right position for your trading style. Now, it's one thing to know that there are lovely patterns like Centene. It's another thing to find them. So this is a screen I did for a webinar 3 months ago as earnings season was just getting underway in July. And notice Centene was on there at 131. It went all the way to 145. I zeroed in on advanced auto parts because one of the slides later on in the webinar is going to show you a stock that topped out at 170 a year and a half ago with a pattern that we identified, Chaikin Bearish Money Flow Sell Alert. So I was interested in that stock back on July 18th. I screened the large cap growth universe for bullish power gauge rated stocks. That means that the fundamentals were strong. I wanted free cash flow. I was sort of a Warren Buffett clone at that point because I wanted strong stocks. And then the two technicals, money flow and relative strength, required them to be strong. Filtered 529 large cap growth stocks down to these 12 names and then started monitoring them. So WellCare was a big move up to 300 from 250 and beyond. Biogen had a big move after earnings. Centene. Advanced Auto Parts was 141. And 13 days later, it triggered an oversold buy signal at the same price, 141. It went sideways for 2 weeks. But I was monitoring it, so I was ready for that trade. Now, what is an oversold buy signal? This is really simple. A stock has a bullish rating, which means the fundamentals are strong, gets oversold, and makes a new 8-day low. I learned this pattern from another Larry Williams. Many of you are familiar with his pioneering technical work that I built my money flow indicator on. So you buy Advanced Auto Parts here at 141. They report a positive earnings surprise, which mirrors the pattern of the previous 3 reports at that point in time. Spikes up above that upper volatility band, just keeps going. Now, sometimes it's good to take money off the table on the spike. So you can liquidate a partial position. Then you had another buy signal. But then something interesting happened, and this is a pattern we're going to go into, which is really powerful. It made a new high, and Chaikin Money Flow didn't go green. What did that mean? Smart money was getting out of the stock, and you wanted to get out of it as well. So you're out of that stock at 170. Remember that level because it's very interesting. It's exactly where it peaked a year and a half before that. And money flow keeps coming out of the auto parts stocks. So today, when the market was up sharply, Advanced Auto Parts was down. Now they're going to report earnings on November 13th, so we've got a little bit of time. Likelihood is, based on what's happening, that they may disappoint. Classic Chaikin bears. We will go into a bear market at some point. We've had some great bearish picks that my associate Dan Russo, who's our chief market strategist, has had on the short side, but bull or bear, we don't care, because when the power gauge rating is bearish, when it's underperforming the market, when Chaikin Money Flow is red, not green, you need to avoid that stock. Get it out of your 401k plan. Don't trade it from the long side, trade it from the short side. So this is Tesaro. It's a biotech and a drug stock. In a bull market, the last 15 months gone from 130 to 28. Again, power gauge is bearish. That's at the bottom. Underperforming the market. How do we know that? Relative strength is red, not green. Institutions selling. Now, why did I circle this time frame in the middle? Because that's the last webinar we did with Larry McMillan. And we were using Tesoro as our classic Chaikin bear. It was $50. They reported a negative earnings surprise, and ultimately it bottomed out at 28. This is a powerful combination. There were relative strength signals all the way at the top, and then along the way at 42, very nice options trade down to 28. Turn lemons into lemonade, avoid these stocks, and use this type of a pattern, and we'll see this with WYNN and Whirlpool and Mohawk a little further on in the webinar. Use this pattern to find bearish candidates. Now, a tiny bit of options education. Don't even pretend to come close to Larry McMillan and the seminal books that he's written. I'm going to distill it down to 3 slides. Keep it simple. Most people who trade options either buy a call option or a put option. Call option, you're betting the stock's going up. Put option, you're betting the stock is going down. Biggest problem, premium erosion. What you pay for the option eventually will be worthless unless the price moves dramatically in your direction. And so your biggest enemy, particularly in the days, 5 to 10 days before expiration, is time decay. It accelerates in the final days. So if you're buying short-dated options out of the money, you're stacking the deck against you. It's like trying to play blackjack when all you have in the deck are 5s and there are no aces or face cards in there. Time decay is your biggest enemy. Therefore, all the options trades that we're going to use as examples in the webinar are either vertical put or vertical call spreads. The reason is that by selling an option with the same expiration but a different strike price, you reduce your cost, just like we saw in the SPY example. And we'll see a number of examples. So when we look for options positions, the simplest way to find a successful, profitable options trade with high probability of success is not to buy the put or the call outright, but to put on a vertical put or a call spread. They're called debit spreads because they cost you something. And they're a great way to position yourself for a move of 30 to 45 days in the stock. So 3 other patterns, and then we're going to keep going with some really meaty examples. Dynamic duo, personality changes, and then that special pattern using Chaikin accumulation distribution, stealth buying and selling by institutions, and this is really an eye-opener. So what is the dynamic duo? Combination of fundamentals and technicals. That's how we started the webinar. The Chaikin power gauge rating and Chaikin relative strength. Finds big winners and losers. Personality changes are really important because as traders, the worst thing you can do is to be stubborn and put your feet in cement. So the key to making and keeping profits is to spot these personality changes so that you're on the right side of these stocks, not the wrong side. We define a personality change as a stock that was outperforming the market and begins to underperform, or a stock that's been underperforming the market that's beginning to outperform. Now, here's a stock with the most ridiculous name change I've ever seen in my life. I can't even pronounce it. IQV, it used to be a drug testing company. And for whatever reason, they changed the name. EQV, I can't even say it. It used to be called Quintiles. Happens to be a really good company. They assist drug companies in FDA first, second, and third phase testing, assembling the data. So let's look at the bottom of the chart, and we'll see that the relative strength indicator went from underperforming the market. The stock was in about an 8-month base, and then started to outperform the market. Institutions were buying. You can see the Chaikin Money Flow was green. When you got oversold here, that's stealth accumulation, and that's a really powerful pattern. But the key is that when it finally broke out on a very positive earnings surprise, it spiked up from 110 to 125. Now, do you want to buy it there? Absolutely not. You want to wait for the first buy signal. You never want to buy that spike unless you have a high tolerance for pain, and you're very lucky. Because most of the time, you're going to sit there waiting and watching. If you go in on the first buy signal, again, it's our oversold buy, a new 8-day low in a stock with a bullish power gauge. Now you've put the probabilities in your favor. You're buying that stock around 122 and it goes to 132. You got another oversold buy signal about 4 days ago, and then the stock was up almost 3% today, likely to go back to new highs. Now, why do I say that? Because it's got a bullish power gauge, outperforming the market. It's been oversold, barely experienced any negative Chaikin money flow, and the next move up is likely to be to new highs. They report earnings a week from Thursday. Analysts are raising their estimates. That's why we have the green exclamation point. So everything you need to trade this stock is right there on the chart. Now, here's a stock that's been all over CNBC and the press, Barron's, Market Watch. Everybody's writing about it. Applied Materials, they make the equipment that semiconductor manufacturers use. And the stock was a big winner in 2017, had a huge run up to 60 from 18. And it was appropriate to be bullish. The power gauge was bullish most of the way up. And then you had a bearish personality change back here in April. The stock was under our long-term trend line. That's a double smooth exponential average. So what do you want to do? You want to wait for the first sell signal. And that was our relative strength sell signal. Remember, 4 to 8 weeks to the downside. Came at about 50. You didn't capture the absolute high, but it was really important to spot that personality change because the stock went all the way down to 33 last week. So much better to get out at 51 or put on a bearish vertical put spread, or then again right before earnings in August at a price of about 47, than to be riding it all the way down to 33. Institutions were selling. You want to be selling with them. Great put buying opportunities. And if you're long the stock, you needed to get out of it. Even if you had bought it at 18 and you're worried about taxes, you see it at 60, you don't get out. When it breaks that long-term trend and the bearish personality change happens, you need to be out of that stock. Plenty of opportunities to sell this stock between 50 and 55 instead of riding it down to 33. Now that secret pattern that 95% of traders never see, we call it the bearish money flow sell alert. And remember, we talked about advanced auto parts going from 140, the signal in July 18th, to 170. Well, look what happened back in January of 2017. The stock peaked at 170, and Chaikin money flow stayed red, never turned green. We call that a bearish money flow sell alert. And then you had this progression that happens over and over again. Bearish personality change here in February. The power gauge turns bearish, so that dynamic duo is weak. Institutions are selling. Now you're looking for the relative strength sell signals to establish a bearish position. Could have put it on at 140, then again at 110. The ultimate low was 78, and then it reversed fortune and went all the way back to 170. And as we'll see, these patterns repeat over and over again. So here's Mohawk Industries. Carpet company, hurt by the fact that housing stocks have been weak. At the bottom of the chart, we see that the power gauge rating turned bearish in March. The stock was around 240. It had had a bearish personality change in January, so this sell signal was very important, up around 237. Negative reaction to earnings, You actually had an overbought sell signal here right before this next earnings report. Big gap down, and then another relative strength sell signal at 196 on the way to 154. And again, this stock was down today in the early going when the market was up sharply. So these trends persist for a long period of time. Really important to spot these bearish money flow sell alerts, because at each of these two signals, look what happened to money flow. You had a nice rally for 3 weeks from 220 up to 240, but money flow stayed red. That said, institutions were selling under the cover of strength. And then when you got this second relative strength sell signal, same thing, overbought. It had a 6-week rally from about 175 up to 198. And money flow should have gone green. It never did. This is what we call the bearish money flow sell alert. And we're going to show you this in the biggest market cap stock of them all. It just happened. Now, back here in January, you also had a bearish money flow sell alert at the all-time high of 280 for Mohawk. These are powerful patterns. You can see them on stockcharts.com, on Thinkorswim, any of your online brokerage platforms. We put it all on one chart for you. Now, everything we've talked about, Warren Buffett calls the fat pitch. He's famously said they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. We call it the ideal setup. The missing piece, those buy and sell signals. 6 pairs of buy and sell signals. Now, again, this dashboard alert is from the last webinar that I did with Larry McMillan on April 5th. I think my wife has subsequently done one with Larry and his team. On that day, of the 40 stocks I follow, Apple gave a relative strength buy signal at 171.60, and Adobe gave a relative strength buy signal at 225. This is 6 months ago. Let's see what happened to Adobe. This was a Larry McMillan webinar. Stock was 225. Remember, 4 to 8 weeks, you got a nice move up to 252. Power gauge was bullish, outperforming the market. It's still outperforming the market. And Chaikin Money Flow was strong. Now, this chart doesn't reflect today's trading because I wanted to be dramatic here. Adobe was up huge today. Was up almost 10% to 260. It's rallying back toward the old highs. Now, after that webinar in April with Larry, we introduced email alerts so that you don't even have to go into the Chaikin app, if you're a member of Chaikin, to see the signals on the stocks you're following. So for a webinar that I was doing on September 25th, before we came to Italy, Apple, which had given that buy signal back in April at 171, gave another relative strength buy signal. And by the way, Adobe just kept giving those signals over and over and over again. Apple gave a relative strength buy at 221. There's the buy signal. Stock rallied up to 231. And look what happened. Bearish money flow sell alert. New all-time high in Apple, and money flow, instead of going green, shows institutional selling. Institutions were selling Apple ahead of this two-day panic. Now, on that webinar, we suggested that you could use a vertical call spread on Apple. Excuse me, again, this was September 12th. Buying the 217.5 call expiring October 26th, selling the 237.5 call against it, $600, 229% profit potential. The stock went to 237.50, better than buying the call with only 170% profit potential. But when we saw that bearish money flow sell alert, we said to our members, Josh Midland runs our option strategy sessions, time to take your profit. So we actually took profits at the high. If you bought the call outright, which we didn't recommend, you would have made a 50% gain with the stock at 230. But the vertical call spread was up 100%. That's the value, the benefit, the beauty of these calls. You pay less, and most of the time you make more. 100% profit on a move from 221 to 230. The spread widened out. It was a wonderful trade. Now, we're in the midst of earnings season. We're going to show you how volatility is your friend. Most people are fearful about trading during earnings season. But with the power gauge rating as your guide, you're going to be better prepared for these earnings reports and know with a higher degree of probability whether a stock's likely to beat estimates or disappoint. So we think that earnings season is opportunity time, and you can take advantage of volatility. Now, I always like to start with one of the biggest calls of my time at Chaikin Analytics. Netflix back in 2014 gave a sell signal at 480. Now, this is after a big split, or before a big split. The stock has gone on to make new all-time highs, but it dropped over 100 points. And people who bought out of the money put options made over 50 times. We had one new client, new subscriber, new member who gave us this testimonial back 4 years ago, recently subscribed to Chaikin, used the upcoming earnings ideas. Netflix had a bearish rating, bought 3 put contracts, 22.20, sold them at 93.90 for a quick $21,500 profit. This is the only testimonial I'm going to share with you tonight. This is all about education, not about patting ourselves on the back. So every week in my weekly market letter called Chaikin Market Insights, we feature our earnings calendar. And back 3 months ago, right at the beginning of earnings season, this is from a webinar we did on July 25th. These were the stocks we were looking at. Whirlpool on the short side. Why? Because it had a bearish power gauge rating. Halliburton. Mohawk we've already seen. On the bullish side, we were looking at Centene that we've already seen. Biogen, which had a big move. So Whirlpool was due to report. And right ahead of that earnings report in July, we had had an overbought sell signal with the stock at about 150. Bearish earnings surprise, the stock gapped down to 122 and kept going, and it was trading at 105 last week. These patterns just persist over and over again. Analysts are still cutting their estimates. The industry is weak, the trend is weak, the power gauge is bearish, money flow. These are the stocks you need to trade from the short side and avoid on the long side. You can spare yourself a lot of pain and make a lot of money if you're focusing on these as your put candidates. Now, here's what the earnings calendar looks like coming into this week. Very few bullish stocks because most stocks were in short-term downtrends. So we were looking at Netflix, which reported after the close with a bearish rating, Philip Morris, which had a big move back in April on a bearish earnings surprise, Honeywell, Schlumberger. These are your put buying opportunities during earnings season. Now, this is what Netflix looked like earlier this afternoon. At the bottom, bearish power gauge rating, underperforming the market, institutions selling. But here's a big difference. Back here in April, when earnings came out, the stock was off its low, and it peaked on the earnings report. Then again in July, the stock was near an all-time high. The company reported, they guided lower, great put buying opportunity. Big difference this time. What's the difference? It's at the bottom of the lower volatility band. No edge in buying a put option here. The place to have done it were on these overbought sell signals at 370, and you had 2 of them, and they were nice put trades. So what happened after the close? Well, Netflix reported better than expected earnings, 6.9 million new subscribers, and the shorts got caught. The stock, which was up 4% during the day, is up 42.5 points right now, trading at 389, up 12.5%. It was up 15% initially. Doesn't mean the game is over. It's got to get above that 380 long-term trend line. But between 380 and 390, it still has to prove itself. But right now, the shorts are covering, and we'll see what happens on the opening. But the bottom line is, it wasn't a high probability put option trade because the stock was already down. So the odds were not in your favor. Now, let's look at a case study where good defense leads to good offense. I'm calling this a profitable win, pardon the pun. Back in early September, I screened for bearish rated stocks in weak industry groups. Remember, we talked about how industry groups and industry trends are very important. Filtered the list down to 15 names. One of them was WYNN. Another one was Philip Morris, which reports later this week, Halliburton. WYNN was interesting to me because the power gauge has been bearish for quite a bit, and you had a bearish personality change in June. So this yellow arrow up here is what WYNN looked like on September 2nd. We made it our bearish stock of the week. Both Dan Russo and I independently picked it. He for his daily letter, me for my weekly letter. And the stock dropped from that 148 level all the way down to 113. Dan put out a cover recommendation on the vertical put spread on October 2nd for 100% gain, and then on the 9th last week said to cover WYNN at 117.21 for a 21% gain on the short trade. But notice how the put spread gained 100% on about a 12% drop in the stock. So very high probability vertical put spread. Now, I started the webinar by saying that I think the market's going to rally into year end. I think we had a V-shaped bottom. We're going to have a little bit of backing and filling, but I believe that we're going to have a rally into year end. It's consistent with the midterm election year pattern. October low, rally into year end. So what stocks do you want to be long and trading call options or vertical call spreads on? The stocks that led us to new highs. And for the last month, we've been focusing on these 5 stocks: Apple, Adobe, Amazon, Salesforce, and Visa. All technology-oriented stocks, cloud computing, electronic payments. Apple's in the music business and the app business. Adobe just killed it today, up 10%. We've been talking about these stocks for a month now. So here's what Amazon looked like earlier today. Power gauge had been bearish. There's been a lot of selling in the stock, particularly on this waterfall decline here in the last 2 weeks. And Amazon, even with that decline, is 177.78. This is to buy 100 shares, $180,000. 10 shares, $18,000. 1 share, $1,800. So is there a better way to play Amazon for a rally into year end when it may very well go beyond the high that it made at 2000 earlier in the fall? Well, there is. You can do a bullish vertical call spread, but you want to buy yourself a lot of time. So in this case, we're using a vertical call spread with an expiration of December 21st. Remember, as Josh said, educational purposes only, not specific sell or buy recommendation. But for $8,000, in this case, $7,900 earlier today, you could control $180,000 worth of Amazon through December 21st. If Amazon moved back to 2000, you'd make 178% return, $14,000 on that $8,000 cost. But the key is you've limited your risk and you're controlling $180,000 worth of Amazon for just $8,000. If you buy the call option, you're paying $11,500. Your profit potential is 50% of the profit potential for the put spread, the call spread, that's why it's circled in red. Options play does this all automatically. It knows I'm bullish on the stock. I can buy the stock, I can buy a call option, or better yet, circled in green with a check mark, vertical call spread. Now, Salesforce is another stock we like. I'm a little late to the party on that. I was bearish on it till the spring when Jim Cramer actually turned me around on it. Power gauge turned bullish, outperforming the market, big institutional buying till this wave down. And we added a new feature to Chaikin, which is a note capability. Any good trading coach will tell you to keep a diary. I prefer to put it right on the chart. So in the upper left-hand corner, there's a note capability. Talked about it with Jim Cramer in a webinar we did on 8/22, made a note to buy it because it was pulling back after earnings. And now last week said buy a call spread on any pullback, and that's what we're seeing. This isn't quite as attractive as Amazon, but the vertical call spread with stock at 145, you buy the 145 call, expiring again, give yourself time, December 21st, sell the 160 call against it, you reduce the cost from $895 to $594. Again, you're shaving 35% off the cost of the call option, and you're more than doubling your potential return. So if Salesforce goes back up to the old 160 level by December 21st, and so over 2 months, make 150% return, you're putting $594 at risk instead of $14,575 for 100 shares of stock. This is probability-based options trading. The power gauge and relative strength and money flow guide you to the right stocks, because typically in this midterm election and in the fourth quarter in general, if you're strong into the fourth quarter, the stocks that got you there are the stocks that are going to get you the best bang for the buck into year end. So everything we've been talking about, Chaikin Analytics, proven stock selection system, and now with our new power gauge ratings for ETFs, incorporates our 20-factor model and something we haven't talked about on the webinar, our stock discovery idea generating engine. Really powerful. We won the Benziga FinTech Award for that. It's all bundled into Chaikin Analytics, and a 1-year subscription is normally $2,195, but as a webinar special for the Larry McMillan Option Strategy community, taking $300 off the cost, reducing it to $1,895. Save $300, go to chaikinanalytics.com/expert, and this offer expires on Friday at midnight, October 19th. Now, as a member of the Chaikin Analytics community, if you subscribe, you get member-only access to our weekly strategy webinar with our market strategist, Dan Russo, and Josh Minlin, unlimited coaching and support in small group sessions, or if you need it, one-on-one coaching, not to give you specific ideas, but to teach you how to use the system, how to make it work for your trading style. And then finally, my colleague Dan Russo's daily morning insights with his bullish or bearish stock of the day. That's where he picked WYNN, Philip Morris, back in April. And the whole point of this is so that you can enjoy the fruits of your trading profits. The webinar that I'm doing tonight, if I looked out the window, this is what it looks like here in Italy. We're on that little narrow street. It's over 1,000 years old, all funded from my wife Sandy's trading profits, using the same methodology. If Sandy can do it, you can do it. Subscribe and enjoy the fruits of trading. Trading is tough. It takes a lot out of you. Reward yourself with a vacation. Like we're spending the whole month of October here in this small hill town in Umbria, but we're also working because using Chaikin Analytics, Sandy can monitor her portfolio. I can give webinars, put the technology to work, and enjoy the fruits of your trading. So as a big final incentive to get you committed to this Chaikin way, I'm a member of the Chaikin Analytics community, I'd like to offer you a fast action bonus. If you subscribe by midnight tonight, we'll take an additional $100 off. You save $400, reducing the cost to $1,795, and you'll get a one-on-one phone call. They usually last a half hour with either me or Dan Russo. This offer expires midnight tonight. We're pretty rigid about this. We used to be flexible, but we've been inundated on previous webinars. So with that, I'd like to thank Larry McMillan for turning out an amazing crowd tonight, biggest we've had in 6 months. And Larry, if you're still on, you want to say a few words to wrap it up, I'd really appreciate it. I know you have some big commitments.
Okay, Mark. Yeah, thanks for a great seminar. By the way, I was at Thompson McKinnon. That you'll remember that.
Oh yeah, I was there in 1975-6.
Right, that's when I came as well, 76. Anyways, that's all over the hill stuff. It was a great seminar. I hope all of you learned something. I know these charts and these Chaikin analytics are extremely useful, and hopefully you'll take advantage of the offers that Mark has generated. I didn't see any questions, Mark, but I guess maybe I can't see them on my end. I don't know if you were going to take any or not. Otherwise, great seminar. Thanks.
Well, thank you, Larry. Josh Minlin answers these questions as we go along. And Josh, I'll turn it back to you to wrap up the webinar.
Sure. Thank you, Mark. And thank you, Larry. Thank you, everybody, for joining us today on the session. In the chat window, I have texted out the offer. You can call us at 877-697-6783, or you can click on the link in the chat window. The discount code will automatically be applied. It's a fantastic offer that Mark's making for a half hour with him or Chief Market Strategist Dan Russo. Take advantage of that. I answer all questions during the seminar. If you do not have a question answered, please call us 877-697-6783, and we will answer all of your questions. Again, that's 877-697-6783, or click on the link in the chat window, www.chaikinanalytics.com/expert. Thank you all again, and look forward to seeing you in one of our future seminars.